What's up, everybody? Today we're talking about how Rocket Lab stock will 10x from here. What needs to happen for that stock to 10x? Full disclosure, building $1 million portfolio here. We're at $92,500, down $3,190 today, down 3%, so it's a tough week. I do own Rocket Lab stock, so I've got $8,280 in the stock, and here's the rest of my portfolio. But let's get to the three things that need to happen for Rocket Lab stock to 10x from here. Okay, and this is where the founder and CEO Peter Beck was talking about that. So launch is just, this is at the Investor Day, launch is just beginning. I think we're most well known for it. We are a small dedicated satellites ride to space. We also build spacecraft and do a lot of space systems. That's a second market I talked about, which we'll go into more detail later. And the thing that we don't talk about right now, it's too early, but they have a belief that if you have your own ride to space, you have the ability to build any spacecraft you wish, then the natural progression for an end-to-end space company is to actually put infrastructure and applications on orbit yourself in due course. They've got launch, that's about a $20 billion total addressable market. Space systems, that second market that they're already in, about a $44 billion total addressable market. So just those two markets, $64 billion. And then this is throughout the infrastructure. And then you have space applications, which is the really big number. It's basically all of the services that they provide that are provided from space. And the TAM for that, total addressable market, is somewhere in the range of $300 billion. So when you put all of that together, you have somewhere north of $300 billion to $360 billion, maybe more, of total addressable market. Okay, and a couple things that they've done successfully so far. So 9 launches since they've been public, 100% mission success rate, which is just incredible. And that shows that they're actually excellent at what they do. They launched a 320 kilogram payload, which their rocket essentially was only rated to lift 300. And so they actually went beyond what they advertised being able to do. And if we look at competition, there is competition out there. They call Virgin Orbit, Astra, Firefly, and Relativity competition. Here's the amount of successful launches that they've had. Rocket Lab, 27, Virgin Orbit, 4. Astra, 2, and then the others, 0. And then we talked about, more launches, increasing the cadence. They've got their own launch pads. Well, Rocket Lab were able to turn it around in 15 days, okay? And if they can do that, if they can keep up that pace, that's how they get more launches in a year, earn more revenue, more margin, and the company's able to grow a lot more. Their closest competitor, Astra, 115 days, Virgin Orbit, 164 days. So they have a lead on the competition. Okay, we talked about it. They've got to be able to grow that launch backlog. Well, they've got 37% backlog growth since August 2021. So that's pretty incredible there. And this is how they're going to improve those margins, right? So their R&D is complete. So that was the cost up front. The core product is proven and reliable, requiring limited further investment into development of Electron. Manufacturing facilities are established, factories in place, and capable of producing electrons every 7 days. R&D headcount is stable, so the team's built and experienced. Any new headcount is focused on scaling production in line with launch demand. So they're going to get cost savings. R&D complete, launch is now standard operations. We can drill into every part of the process, identifying opportunities for cost savings to reduce build price per vehicle, stronger negotiating power, and then reusability. The first stage represents 65% of the total cost. By reusing them, they can make significant cost reductions. That's how they're going to improve margins. And then space systems, which we've talked about, they're already in this market. 66% of Rocket Lab's total Q2 2022 revenue is from space systems, which creates cash flow stability and diversity and offsetting the natural lumpiness of launch revenue, right? Because launches can get canceled. If one thing gets delayed or weather or whatever, launches can get canceled. But space systems is a lot more reliable. All component hardware companies acquired by Rocket Lab have had record sales and production rates for 2022. And they have $396.4 million in total space systems backlog. So now we've talked about their launch services backlog and space systems backlog, okay? And this is all leading them to being positioned to capitalize on the largest space addressable market, which is space applications. And then they're building Neutron, right? So they've got, several stages of this complete, and they say the first Neutron tanks are complete. So the hardest part, tooling and molds, are the complex, time-consuming part requiring extensive design work and refinement. With them now done, the first hardware has been delivered with more in production at pace. So they 3D print their engines, which is pretty amazing. They did this with the current engine that they use, and they're doing this with the Neutron engine as well. They have some of the biggest 3D printers in the world. So right now, and this, again, these numbers right here are aspirational, right? And so we need to take these with a grain of salt, but it just tells you kind of what is potentially out there. And this is for launch and space systems, not space applications. But right now, launch and space systems, they call the total addressable market, under $10 billion, 2022. By 2031, so we're talking 9 to 10 years, we're looking at almost $100 billion. So that's, more than a 10x from there in total addressable market for launch and space systems. And so if you think about revenue growth, if the addressable market 10x's and their market share stays the same, they have the opportunity to 10x their revenue. If they gain market share and the total addressable market 10x's, then they could 15x their revenue, 20x their revenue. That's how that can work over time. And again, these are aspirational numbers, right? So none of this is guaranteed. This is how it could happen. Cash position is important here, right? Do they have the liquidity to keep the business alive? Well, they raised $777 million during their PIPE, essentially de-SPACing or SPACing, coming onto the public market. They've deployed approximately $180 million before transaction adjustments into growing the vertically integrated space systems business through acquisitions. They're making disciplined investments in addressable market, expanding research and development. But they have $546 million of cash in cash equivalents and restricted cash as of June 30th, 2022, which they say they have the necessary resources to do what they said they're going to do. So let's get the numbers, right? What do analysts have estimated? These are just estimates in terms of revenue through 2026. Well, they see it growing from $228 million in 2022 this year. That's 266% growth, which is pretty amazing. To $1.14 billion in 2026, which is going to be a 49.5% compound annual growth rate. And in 2026, that would be growing revenue at 56%. These are, again, just aspirational numbers, but it just gives you the idea right there. That alone is a 5x in revenue over the next 4 years, if they get that right. Okay, in terms of net income margin, again, analysts forecast this company getting profitable in the 2025-2026 timeframe. So they think they're going to have net income of $108 million in 2025 and $168 million in 2026 for about a 15% net income margin, okay? And essentially, this is showing that margin expansion, right? Getting more profitable over time, going from a 23% gross margin to a 40% gross margin in 2026 as they get more efficient. What does all this look like? How do we potentially even think about modeling a company like this out, right? Well, going over here to this Everything Money calculator, we're doing a 10-year analysis, a low, a medium, and a high scenario. Again, these are just estimates, assumptions, but we're going 35% revenue growth, 40 and 45. I think all of these are realistic. It could be lower than this. It could be higher than the highest of these numbers. So this is, again, over the next 10 years on average, right? So all we're doing is building a scenario of possibilities. Profit margin, keeping it about 14% for all of them. Free cash flow margin, 14 for the low, 16 and 16. And then at a PE of 50, 50, and 50, these are total guesses. The thing is they're still going to be early at this point. And so earnings are going to continue to grow a lot. Once they get profitable, there's still the opportunity to grow earnings. So a PE of 50 with that much market ahead, I would be totally comfortable with. Price free cash flow of 50 as well. And I wanted a desired annual return of 12% because I'm taking on more risk there. So hit analyze, what comes out. If you believe the low scenario, you'd be willing to buy the stock at $13.82 a share right now. If you believe the mid, 19, and if you believe the high, 27. The stock is currently at $4.18. So the low is a 3x from here, the mid is a 5x from here, and the high is a 6 to 7x from here, okay? These are just assumptions, but I own this stock. This is how I think about this stock. It's risky, it's an aspirational company, but I think it's the company in my portfolio that has the most return potential as well as the most risk, okay? And I'm willing to have 1 to 2 companies like this in my portfolio that I truly believe in. I believe in their management. They have the track record so far. They're in a huge industry that's getting more demand. I believe in this company and I'm willing to own shares right now. Let me know what you think in the comments.